What if I told you that markets have a rhythm, one that might repeat itself year after year? I'm Matt Weller, Global Head of Research with StoneX Self-Directed, and every month I dive into the seasonal tendencies of major asset classes to help traders and investors make more informed decisions. If you're not already paying attention to seasonality, let me show you why it matters. Market seasonality is the tendency for certain assets to perform in predictable ways during certain times of the year. For example, the S&P 500 has historically performed well in the final few months of the year, often referred to as the Santa Claus rally, whereas June, August, and September tend to be bumpier for stocks, giving rise to the market maxim, sell in May and go away until Labor Day. Of course, no pattern plays out perfectly every single year, but understanding these tendencies can give you an edge. So, why does seasonality exist? It's a mix of psychology, institutional behavior, and economic cycles. Ultimately, investors are human. Fund managers rebalance at quarter end, tax deadlines affect selling pressure, and even global events like holidays or fiscal calendars can shape market flows. These recurring drivers create opportunities for traders and investors. For example, let's say that you know gold tends to perform well in January, or that volatility for the market tends to pick up in Q3. That doesn't mean that you blindly buy or sell, but it can give you historical context for these market moves. Seasonality can help you set expectations, time your trades more strategically, and manage risk with a fuller picture in mind. It's not quite a crystal ball, but it's a very powerful lens through which to view the market. That's why I publish a market seasonality report at the start of every month. In it, I break down the historical tendencies of equities, commodities, volatility, and more, backed by decades of price data. But it's not just charts and numbers. I interpret what these patterns could mean in the current market environment, whether they're likely to occur this month, and what a divergence from the historical trend could suggest. Whether you're an active trader or long-term investor, these insights can help you better understand the broader market backdrop and what it might mean in the weeks ahead. So if you're looking for an edge, grounded in data and market history, be sure to check out my market seasonality report at the start of each month in the thought leadership section of StoneX.com. Because while history doesn't repeat itself exactly, it often rhymes. Thanks for watching, and I'll see you at the next report.